So what's the risk in multifamily syndications? I will say that all the risks are outlined in our deal-specific ppms. That's the private placement memorandum. However, like most things, the higher the risk, the higher the reward. Going from the riskiest to the less risky, you've got your ground-up deals would be the riskiest, right? You're starting from land, and then a lot of projections go into that. And then a heavy value add deal is also going to have a lot of projections in your assumptions. Then a light value add, and then a stabilized deal. Now, stabilized deal being the less riskiest, but there's not a lot of value to add as well. So your returns are not going to be as much. Now, with all that said, I'd like to provide you with some data, right? So in 2009, at the bottom of the financial crisis, delinquency rates on single family homes was somewhere in the 5% range versus multifamily, which was in the 1% range. Lastly, when we're looking at products, we're looking for already proven business plans. Typically, our apartment acquisition will have a occupancy of greater than 90%. Usually they're going to have already rented some of the units at the rents that we're aiming for, or if they haven't in the exact property we're going to acquire, a neighboring property is hitting those same rents that we're going to be targeting. And then our assumptions are very conservative on the exits of these properties. So that's one way that we hedge against these risks.